Hey traders, this is Jason from Leavitt Brothers. It is Monday, November 25th. Hope you're having a good day. Hope you had a good weekend. A development has been forming in the market over the last, month or so, even a little bit longer, that I wanted to kind of bring to your attention if you hadn't seen it yet. Namely, there has definitely been, it seems like there's been a rotation of money out of tech and into safe havens. A lot of the tech stocks that led the market higher during the summer and the fall months, a lot of them experienced 100% gains, 200% gains, some of them doubled, tripled. Those stocks are now selling off. And meanwhile, there are a lot of safe havens, companies that make toothpaste and toilet paper, they're doing really, really well. And the question is, why is this? Why is money coming out of the speculative stocks and going into the safe havens? What does it mean? So first, I want to go through some of the stocks I'm talking about, and then I want to offer up a bullish case and a bearish case. Okay, so like here's Facebook. It's had a great year overall. It more than doubled off its lows, but obviously it's now 10% off its high. So obviously money's coming out of the stock, even though the market is making new highs. LinkedIn, great company, great stock. It's done really, really well, but it topped back in September, and right now it's much closer to a 4-month low than it is to its high. So again, money is coming out of a stock that used to be leaving the market. Tesla, I'm sure you know about, has been incredible. It rallied from the 30s all the way up to close to 200. Now it's down to 120. So it's down more than 30% off its high, and it's not showing any signs of firming and moving up. Yelp, another internet stock that it tripled from 25 up to 75. Now it's forming a topping pattern, and today it broke through a support level. And then Zillow, another internet stock that had done really, really well and is now well off its highs. So these are stocks that led the market. They were doing really, really well during the summer and during the fall, and now they're all pulling back. Let's look at some of the stocks that have been doing really, really well. Where's the money going? Okay, here's ABC. This was a play of ours back in October. It broke out to 62.5, rallied up to 70. This is just a drug company. Cardinal Health, another drug company, broke out, is doing really well. Colgate-Palmolive, this is all-time high territory. Stock is doing really, really well. Broke out in October, rallied up, consolidated, broke out last Friday. Now it's sitting near its breakout level, but even with today's hesitation, overall this is a great company. It's a great looking chart, but they make really, really boring products, cleaning products and such. And I got to wonder why money is rotating into this stock. Costco is considered a safe haven. It's doing really well. This is all-time high territory. It broke out last Friday. First it broke out at the beginning of November, and then it consolidated, and it broke out Friday. McKesson, another drug company, broke out, pulled back. Now it's up. Pfizer broke out a couple weeks ago, consolidated, broke out again today. Procter & Gamble, this is the epitome of a safe haven. They make toothpaste, they make cleaning supplies, they make toilet paper. They make the stuff that have low margins and that you got to buy it regardless of how the economy is doing. It broke out today. Rite Aid, it rallied up huge, consolidated, and now over the last week it's been doing really well. So money is obviously rotating out of the tech stocks into the safe havens, and the question is why. So I'm going to offer two different explanations. Okay, the bear's case is very simple. Money is rotating from techs to safe havens, and this is bad. Okay, and if the market is healthy, people are a little bit loose with their money, and they want bigger return. They're looking at some of the tech stocks and saying, wow, this could rally 20, 30, 40%. Some of them could rally 100%. They want a piece of that. The market's strong. The market's rallying. It's not throw all caution to the wind and buy everything in sight. But when the market is strong, people want to invest, and they want exposure to high beta stocks that have the potential for a big return. And the fact that money is coming out of tech and into the safe havens is a bad thing. So this is the bear's case. The bears would say that there is some underlying weakness that's starting to brew that we should not ignore. Now, the bull's case, a little bit different. The bulls will say new money is hesitantly entering the market, which is good. What does this mean? It means there's a lot of money on the sidelines. Okay, there are individual people who got out at the lows in 2007, 2008, and they've been sitting on the sidelines year after year after year. The market goes up. The market went up in 2009, and they're like, okay, I see a bottom's in place. When it goes back down, I'm going to get back in. Then it keeps going up in 2010, and they're like, okay, if it can just go back down, I'll buy. And then they watched it go up in 2011, they watched it go up in 2012, and they've been sitting there for 2, 3, 4 years just wanting to get back in, but they haven't done it yet. And here we are in 2013, and they're still not in, but they're starting to get in. Okay, so and besides these individual traders, you have hedge funds that are underperforming. Okay, so what I'm saying is, like, there's a lot of money sitting on the sidelines, and when this new money comes into the market, for some reason it's not going into tech, instead it's going into the safe havens. This to me is bullish. Okay, if it was Katie bar the door, throw all caution to the wind, and just get in at all cost, then I'd start to wonder if, like, maybe this is a top. But when money that's been sitting on the sidelines for many years is starting to tiptoe back into the market with some of the safer stocks like Procter & Gamble, that tells me people aren't completely sold on the rally. And when people aren't sold on the rally, that tells me the rally probably has more room to run. Okay, so it's the bearish case and the bullish case. Okay, the bears will say money is rotating out of tech and into the safe havens. This is bearish. The bulls will say new money is coming into the market, and for some reason that new money is being put to work in the safer stocks. So people are dipping their toe in the pond, but they're not really jumping in. They're not putting all their chips on the table, and that's the bulls case. Okay, my personal opinion, I would subscribe to the bulls case. Okay, the trend is up. It's strong for a lot of reasons. It should continue. And the fact that people are probably not 100% sold on buying Yelp or buying Facebook, but instead want to play it safe by buying Colgate Palmolive or one of the drug companies, tells me that we have, the market is not overbought. And from a psychology standpoint, people are not completely sold on it. So they want to play it safe. And when they play it safe, that tells me it's going to probably continue on. All right, hope you got something out of this. Good luck with your trading.